let's look at the defense industry. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. This is what I call the theme. I have put it under economic signals. And you can see that the performance vis-a-vis the S&P 500, this theme is substantially underperforming. Hence, by the looks of it, there doesn't seem to be any major concerns at the moment that there will be major geopolitical conflicts. So when we look here at Huntington, Ingalls Industries, and they do make warships, 52% are from the low, relatively close here to the 52-week highs. But as you can see, there's nothing really, big happening with this stock and this company. So here is their website. They do have the whole CSR angle. Here you can see one of their battleships. So they have been awarded almost 3 billion contract for Stennis RCOH. So this company, it definitely is very dependent on government contracts. And the current administration is more favorable to this industry than the previous one. Yeah, so that is something to look out for. There are, some geopolitical events at the moment. There is this whole situation in Myanmar, which is something to have on our radar. You also have the situation with Ukraine, Russia. But, it is relatively calm at the moment. But certainly, that is the big X factor when either going bullish or bearish a stock like this, is that it's very subject to surprises in the political arena. So that is just comes with the territory. Looking here at these gray cycle patterns, you can see that relatively often they have been able to call the tops, and this is over a very long time period. Clearly, it is not perfect. It is very rare to find a chart where the cycle patterns are perfect. Judging by the gray cycles, we are towards the later part of the current rising phase, which means that we expect a decline to happen around the May-ish period, but of course it can come earlier or later as well. We have definitively seen a rising phase, so there's no doubt about that part having played out. As far as further bullish sentiment goes, there's some issues beyond the cycles, and that is the RSI. The RSI has pushed into a territory which has triggered pullbacks multiple times in the past. We have sometimes been overbought for extended periods, but you can see that there is a very strong tendency for this stock to react negatively to overbought RSI. Another key thing is the red 200-week moving average. What was support has now very likely become resistance. So you could have a combination of resistance levels. You would having a declining phase on the cycles, and you have overbought RSI, and you have the moving average resistance. And by the way, there is a minus 35-ish% negative correlation with S&P 500 long term. So here you have the daily data points. You could certainly make the case that we have, an inverse head and shoulders pattern playing itself out. Also, it's a bit of a rounding-ish bottom as well, like this, but maybe more inverse head and shoulders pattern. That is a bullish pattern. But the best time to buy that pattern is to buy the low end of the head or the low end of one of the shoulders. Ideally, of course, the right shoulder, because you have no idea here that we will form a head. But yeah, that is my take on inverse head and shoulders pattern. You do have those who say that, we now have a breakout, which is true. You do have a breakout at these levels, but if you are just waiting for breakouts, then you would have missed 51-ish% move from the low. And my suspicion is that people who look at breakouts, analysts, that far fewer of them actually trade themselves, because from a trader perspective, it doesn't really make sense to be very bullish about breakouts, because as an investor, I am then annoyed that, oh, why didn't you tell me earlier? I wanted to be part of the move. It's all about buying low and selling high. Anyway, we do draw this price line here, and you could also make the case that we do have some horizontal resistance levels, a bit all over the place here. That's another thing. Looking here at the PPO, we can see that a high PPO, which measures the distance between price and the 200-day moving average in this instance, you see that multiple times high PPO, same kind of PPO that we have now, it has called tops for this stock. That's a risk. RSI, high RSI also is something that on the daily data points Huntington isn't a huge fan of. Okay. There's factors here. Here, looking at the trend channel, we have broken out above the upper end of the channel, it is bullish, but it ties into this whole developing narrative of maybe having gone a bit too far too fast, and that there is higher risk now for bulls than we have had in quite some time. Looking at the average target price, and there are some big names covering the company, they suggest from the current stock price a minus 9-ish% downside. Saks.com, they have a number 3 hold, but A value, A growth, B momentum, so they are more towards the bullish side. Though granted, they do have a number 3 hold Saks rank, and they say that they certainly prefer the 1 and 2 as signs to initiate bullish positions. If you look here at the dividend, 2.2%, so that it is of course good to be paid a dividend, and this is a decent dividend. Though I personally prefer 3%, because when the dividend is 3%, then the dividend is starting to become so significant that it is a real hedge towards downside. Now with the 2.2% dividend and the average price target suggesting a minus 9% downside, then the dividend doesn't really help you that much. So by taking dividends together here, the theme is, this is one of the economic signal themes, so this one is definitively very subject to X factors. So that is like those big unknowns that can become a big thing. But the current big thing is, of course, the lockdown contagion situation. That is the big narrative. That is the big battle. And global interventionism, it doesn't really fit inside that framework, because it's all about not having those having interactions at all. And the current narrative is that the contagion is like the major risk out there, the biggest at least. Looking at the technicals, I think that there were many alarm bells here that there's a high risk situation for bulls. We have seen a sizable move, resistance levels and risk all over the place. The fundamentals also towards the bearish side, and the final is the seasonality. Looking at the seasonality, April is a decent month, but the month around the corner, which is May, is the weakest of all months for Huntington Ingalls Industries. And that ties very well into what we saw with, the cycle pattern as well. So yeah, I do think that looking long term, I think that I might lean a bit bullish on Huntington's. But that is because I think that there's higher risk of geopolitical factors. Looking at the shorter time frame, I definitively think that the evidence presented here speaks a very clear and consistent message that there's a high risk of a pullback from these levels.